Welcome back. I'm Joe Elkier with Damian White. This is the Gold Spot. Damian, this week we're heading into probably the biggest Fed meeting of our young lives. A lot of information coming out. We're already seeing higher projections in gold, 2,900, 5,000, all sorts of high numbers being thrown out. Can you expand on what we're going to see from the Fed meeting this week and kind of go into details on that?
In actuality, this one is a very important one because what we're starting to do now is start a rate cutting cycle. So the Fed has raised rates back in 2022. They've left it at one of the highest levels and the most aggressive increases in rates for quite a while. That is starting to now put some kind of pressure on the economy, obviously the housing market, job market, financing. The Fed is going to start cutting rates this week. The anticipation is for 0.25%. And in the last handful of days, as economic data has come out, there's been rumblings of an increase to a 50% basis point cut, which is pretty extraordinary. It's only happened several times. A few times they were at the point where the economy is going into recession. So what's unusual about this is we're actually cutting rates when the economy is not in recession. We have a full job market. Stock markets are near all-time highs. Gold is at all-time highs. So it's kind of unusual to do that. It would be a little bit of a surprise, I think, for them to go and cut a full 50 basis points.
If they did the 50 basis points cut, I mean, is that signs that there's bigger problems with the economy?
That's what people are anticipating. If the Fed does that, that they're acknowledging that they're behind the curve, that they've waited too long, that they're worried about the economy. Still, the anticipation is for 0.25%. But, however, what that really does is when you start cutting rates, it's inverse to what we did. When we raised rates, we made the dollar stronger. We made the dollar stronger around the world against other currencies, thereby exporting our inflation to the rest of the world. Now we're going to go into a rate cutting cycle, which is going to weaken our currency. One primary aspect of that is I think it would start becoming a tailwind for the prices of gold with a weaker currency.
So with all this potential and, a powder keg really in the economic world, the metals world, what are the ramifications across the markets with the rate cuts?
One thing I think that a lot of people have not taken into consideration or has kind of went buried in the news is that right now we have what they call a yield curve inversion, which means that short-term rates are actually higher than long-term rates. Traditionally, what happens, they start cutting rates. That inversion will come back to its normal scenario where long-term rates are higher. They're paying more money to you to lock in your money for a longer period of time. The point is here, though, is that we've had an inverted yield curve for 24 months. It's the longest time in history. The only other time, which is kind of relevant to this, would be the 1929 Great Depression market crash. That was the only other time where the yield curve has been inverted for this long. They're calling for a soft landing by the Federal Reserve. I personally think this is going to turn into an economic collapse is a strong word, but a very detrimental economic situation for housing market, for stocks, for employment. And again, we keep circling back to gold. Gold has been trading at all-time highs. Anyone ever in the history of the planet Earth who has bought gold is now in profit. There's no reason to sell. Gold is the place to be. Silver is now playing catch-up, which it hasn't in the last year or so. We're starting to see some real buying come back into the market. There's some fears about election. There's fears about the rate cut. There's fears about the economy. Let's protect our money.
Central bank gold buying is at all-time highs. It's projected to go even higher. You always hear us say, buy gold and wait. You don't wait to buy gold. It's never been more important as it is right now to be diversifying into physical precious metals. Go to our website, give us a call. We're happy to answer any questions and talk to you. We'll see you next week.
If you enjoyed today's Gold Spot, like or subscribe to both our YouTube or our Rumble channels. Also, comment below if you have any questions or if you want to hear us talk about something specific in a future video.